right. Good evening. It is around 9 p.m. here. And I wanted to just touch base on some potential trade strategies that you might start thinking about if you wanted to play a range rather than taking a bullish or bearish stance. Something that has a little bit more upside, guaranteed. Well, not guaranteed, but rather something that at least has a much higher probability of success. This is a S&P mini SPX, so it's the symbol XSP. Depending on your broker, your brokerage company, they might list it differently, but on this particular broker, it is dollar XSP dot X. So this pretty much tracks S&P. It is cash settled. So whatever profit or loss that you incur is all there is. You do not get assigned or assigned a stock essentially, as you could be with SPY. So I favor selling iron condors between a range, right? Because if you were to buy iron condors and you're playing outside of the range, you believe that the stock is going to be outside of your range. So it's very important to pick a support as well as resistance to play within. I like high implied volatility. These are implied volatilities. Um, Basically, it's the theoretical move that could happen up or down um, on this right side here. And I like the high ones because that could potentially mean that you know, my premium, gets pretty much goes to zero. Because when you collect the premium, you want that premium to be pretty much be down to zero. Um, so let's look at this August 17. This guy is trading right now at 415.19, so it's pretty close to what SPY is. Although SPY really closed at 414.17 today, so it really not much different. So I'm gonna use SPY's range that I think that SPY's been kind of prevalent in. I have a 417, between 404 and 417 as my support or resistance here. So let's kind of just for the purpose of education here, let's say that we're gonna go with 404 and we're gonna stop at 417. So let's reduce the spread here a little bit, so you'll see what happens. 416. So it looks like essentially, it's kind of bouncing around between those. So let's leave it at 404 to 416. Or we might say, all right, let's go at 405 to 417. Now I know that there's very basically no volumes here, no open interest, so people might be worried about being filling, because it's S&P. You shouldn't have. It's pretty liquid. You shouldn't have issue filling it. So let's just go forward here for 17. I'm gonna select the bid, right click on that, and just analyze the sell iron condor, and it's for just to kind of get an idea of what's going on with this thing here. So I'm going to move this to some break-even spots here, just for visual clarity here. So what I have here right now, and I'm gonna just adjust it a little bit, just to hit it right where there's no loss, right? Where there's like zero loss, right? So what you're looking at here is 405.82. That's where the stock has to get to for me to break even. So if the stock goes low, as long as it does not go below 405.82, I do not take on any loss, and I do not take gain as well. Same with to the upside here, as long as it does not exceed 416.18, as it's represented here, you do not take any profit or loss uh, at expiration, which is August 17th, couple of about 2 weeks from now, right? So now let's move this a little bit further up. You know, this is where our maximum gain is. This range here that I'm drawing up for you here. Maximum profit here is at 409. So anything above 409.43, you collect. You pretty much keep $318. $318, which is the premium that you collect when you fill it, and you keep the maximum. Same with if that stock does not go, if it's at 412.94 or below, you keep that maximum profit. Now the stock's at 415 now, so the possibility of being at 412, relatively low. But at least if the stock ends up at, let's say it ends up at exactly 415, you still make $100, $117. So you get that 318 credit, and then you buy back, and the difference would be this profit here.